Today I'm delighted to be joined by James Varga, serial entrepreneur and founder and CEO of the Edinburgh fintech business DirectID. How are you, James?
I'm good. Fantastic. Thanks.
Good, good, good. Um, Looking at your profile and doing some research ahead of our conversation, you've worked in some really interesting businesses over the years. Maybe you can start by, I guess, talking us through your career journey and the reasons that you were first drawn towards that kind of tech startup business world.
Sure. I mean, serial entrepreneur. I don't know. That's for me. That's got some gravity to it that I've never quite achieved. But I've had people friends refer to me as a bit of a startup junkie. So I think I kind of gravitate to this space because I love the energy and all the rest of it. For me, it started in university. I studied marketing and business in university a long time ago now.
Yeah.
And then last year at university, we started a startup. We thought we would apply some of the stuff that we were learning and apply it to a small business of some sort, and ended up picking direct marketing of all things.
Right.
So a direct marketing company that focused on fax advertising when people had fax machines. Not to date myself too much, but some of us will still remember that. Where we built a database of people from a market research company. So this is well before GDPR and personal data was held with any value.
Yeah.
And we did direct fax advertising, and we did it in an environment where we knew the legislation was coming in to stop us doing what we did in a year from then. So we thought, as you know, at university, you can't really commit to too much in a long term. We don't know what's happening around the corner. We thought, well, that would be great. Let's go out and give it a shot for a year, knowing that there was a fixed date for us to stop. And then from there, I mean, it's been one dream after another, one desire after another to try and build something or be successful. I've always been involved in technology. You know, Commodore VIC-20 64 was my first bit of coding, and you know, just love that sort of marriage between technology and business. You know, that we see every day now, you know, as part of our daily life. But, you know, before the dot-com boom and everything else, it wasn't so common, right? And so, yeah, I mean, I think for me, it's always been about bringing these things together, whether that's home media PCs or personal finance management tools or digital agencies or whatever it is. I just love that process of understanding a bit of requirement. I'm a first principles type person. You know, what is the root cause? What are we trying to solve? What is the core behavior? And can we use technology to improve that in any way? And that's a fantastic process to go through. That creative process is fantastic.
You started DirectID in 2010. What prompted you to kind of launch, I guess, the first iteration of the business then, and how has it evolved over the last 10 years?
So the idea really came from I was working in a personal finance management tool, another Scottish success story, Money Dashboard, right? So I was helping to build that early days, and we realized actually in that process that you could tell somebody they want to, you know, that you can help them with a mortgage or reduce their card payments or whatever it is. But most consumers want convenience, right? They want to be able to drag and drop that financial product. And even at the time, you couldn't do that. You still had to fill out forms or go into branches or do things, right? So in a purely digital context, even if we could suggest people do something, the process of actually doing that was hugely inconvenient. And within the PFM world, we connect people to their bank accounts to build a balance sheet, of financial perspective of them. We realized actually that financial services were a trust network, right? There's an incredible amount of identity and data information that we already have with our bank account. Yep. If we could leverage that, then we could solve the challenge of convenience around KYC, AML, credit risk, identity, whatever it is, so that businesses could understand the individual, right? That was the basic idea, you know, and we started talking about that a long time ago now, you know, before fintech was fintech, before open banking was open banking, even before GDPR said that actually as consumers, we should own our identity and control it. When we started, we thought, well, actually, the only way to really solve this problem is put consumers at the center of that conversation, right? Because
Yeah.
us as consumers should own our identity and data. So we built a consumer digital passport, right? Somewhere that you could connect all these things together. And then as you travel the internet, share bits of your information, prove you're over 18 without sharing your driver's license,
Yeah.
move to a new country and prove that you had financial wealth or identity in another context. And really just kind of try to empower individuals with that personal data and identity. Unfortunately, about 5 years ago, we realized we were still too early for the market, right? That again, this was still before GDPR and everything else, but that the world wasn't quite ready to accept people owning their identity, or at least corporates, big organizations weren't quite ready to accept that. So we pivoted to a B2B platform, right? DirectID, which is what we focus on, still is around the same pain, right? We want to leverage that identity and data to solve credit risk and fraud and KYC, identity, AML, that sort of thing, so consumers can get a better user experience. If I can get a loan in 30 seconds, I'm a pretty happy person, especially if I find the car that I want and I've fallen in love with.
Yeah.
My partner's finally said, yeah, go for it, or TV and John Lewis or whatever. I mean, we've
Yeah.
all been there at some
Yeah.
stage, right? Or the house of my dreams, whatever it is. Or I want to transfer money or invest in something. There's so much in financial services that require these checks, right? That if we could passport or grandfather the trust that I already have with my bank, we can streamline that and life becomes much, much better. So that's still what we do today. And it's exciting, especially in the pandemic.
I mean, I read an article earlier this week that highlighted the doubling of revenues at DirectID during the COVID period, which is great to read. We spoke kind of off camera about you don't need to search for negative news, but sometimes you need to work a bit harder to find positive stories. So fantastic to see that it's done so well.
We have a lot further to go, though. There's still a lot of work ahead, but yeah, no, it's been really good progress this year.
I mean, do you think that, I guess, the sudden and significant impact that the pandemic has had on many people's earnings mean that historical credit checks as a way of, I guess, assessing the suitability of customers for financial products is going to be a thing of the past?
Yeah, I think there's a huge shift coming in the market. I mean, credit reference agencies, bureaus, whatever you want to call them, what we're talking about is the Experian and Equifaxes and TransUnions of the world. I mean, huge companies doing fantastically, have always kind of leveraged people's personal data to try and solve some of these pains. My challenge with them is they're very historical, as you say, they're very historical in nature, right? So knowing that I was employed or that I've paid my bills over the last few years doesn't help assess me today, and this is where one of the big shifts that we've seen in the market is I think more and more businesses, especially financial institutions, are realizing they can't rely on data that could be 12, 24 months old or 6, 18 months, it's all historical. And I think the other thing too is it's not personalized, right? Trying to understand my income by where I live in a postcode doesn't relate to me as an individual. I can be, a recently grad still living at mom and dad, or I could have a big house in a poor area or something like that, right? And for me, when you look at financial services, you look at the pains and the pressures of the regulators and so forth, a lot of it is around being responsible, right? Is doing a proper affordability check on you as an individual.
Yeah.
And when you think about the pandemic and the shift that's happened over the last 4 months, relying on historical data is just almost crazy talk now, right? But you do need to be responsible, right? You do need to kind of make a level-headed, personalized, appropriate decision for that individual to say, okay, your income is this and your expenses is that, so this is what we think you can afford, and go through that normal process. I think the other thing that we've seen is it's not just around customer onboarding or origination, it's credit risk across that credit risk life cycle. So what I mean by that is it's not just applying for the loan, but it's existing loan holders, right? Or credit card customers or whatever. If you're a fuel card company, for example, you had a fuel card, how do you know which drivers are were driving for hospitality and have been, you know, hugely hit by the pandemic versus those that are driving for Amazon and have done 20 times the business. You know, it's the
Yep.
world has changed quite fundamentally into collections and recoveries. The pandemic, not just so far, but over the next few months, we're going to see a huge impact, not just in consumers, but businesses. So, you know, we recently launched a collections recoveries product that is there to change the conversation with an individual, right? Because what normally happens is you go through a big convoluted debt guidance or debt collection process. The affordability assessment might take 45 minutes of me asking you questions to get through. That's hugely inefficient. But then you end up in this situation where you'll say you can afford one thing and I'll argue for you to afford more, right? And it becomes a negotiation, which creates huge stress on you, anxiety on me. It's just
Yep.
inefficient. If I can look at your bank statement, I can say, okay, let's do 10 pounds every 4 weeks because you always have 10 pounds every 4 weeks, or whatever it is, right? It just allows us to have a upfront, candid, meaningful conversation that hopefully isn't as stressful as that negotiation, right? Of you feeling that I'm going to try and get as much money out of you as possible, and you're going to try and avoid that, right? So I'm going to demand it, and it's just crazy. So yeah, not just the reliance on bureau data and traditional scores, but that just how do you engage consumers or businesses in this current world where you really just need to understand them.
And so as the doubling in revenues come from new business, or has it been, you know, as you say, it's it kind of the credit bureaus might be, or the way that they operate might be a thing of the past, or are you seeing that reflected in the kind of financial institutions you're dealing with, or is that still a bit slow in coming through?
So I think one of the big impacts that the pandemic's had on financial services in general, which is traditionally very risk adverse, right? I mean,
Hugely.
let's be
Yeah.
honest, that's what
Yeah.
financial services are. That's what banks are all about, right? Is protecting wealth, protecting identity, protecting security, right? They're risk adverse by nature. And in that environment, doing something different is always more scary than doing the same thing, right? So the industry tends to just keep doing the same thing. I think the pandemic has kind of shaken the industry up quite a bit and has forced people to go, actually, I just can't do the same thing, right? I can't always require a wet signature. I have to move to electronic signatures because I'm not in the office. You're not in the office. I'll never see you. You probably don't even have a printer these days, right? Or let alone a
Absolutely.
scanner.
Yeah.
So, you know, and yeah, so I think there's been a bit of a catalyst in that point of view. A lot of the revenues have come from new projects. I think we've brought 16 companies onto the platform this year, so that's about 2 a month. It's a bit crazy,
Yeah.
and they're bigger and bigger companies. You know, we're talking big gig economy companies, tier one banks. We've got some projects coming up with automotive finance and that sort of thing. I think, you know, it's a combination of things. It's a bit of a perfect storm for us that says, okay, you can't keep relying on what you've always done.
Yeah.
What you've been relying on is now inappropriate. And actually, the way you've interacted with people has changed now, right? Because even today, people need something more personalized. They need the convenience. They're at home. You know, they finally found the car they can afford or whatever. They want to get through that process quickly and easily.
I guess following on from that, this increase in revenues and the work that's generated. I mean, what steps did you take internally to, I guess, ensure you could cope with that increased demand at what I assume, you know, would have been a time of personal disruption, you know, for both yourself and many of your employees?
Yeah, well, I think fortunately, I mean, I've always been fairly virtual and how I've started these things, right? I'm a big fan of that. I've even had purely virtual development teams that have run 24/7 and pair programming and stuff. Some really interesting experiences from that. So as a business, I mean, we built the business right from the beginning to be fairly virtual. I think it took us about half an hour to go virtual. People came in, picked up their extra screen, maybe their keyboard, went home and continued working because the business is built like that. You know, I tend to travel so much, I can work from anywhere. And a lot of the team is like that. So it took very little effort to go virtual. It's been a good experience so far. I think everyone's somewhat enjoyed it. You know, it's
Yeah.
always hard, and I think there's a whole new cultural challenge coming to a lot of businesses over the next few months where, you know, we have to double down in communication and culture
Yeah.
and engagement because, you know, being a single person working in a flat by yourself day on day on day as a little bit of an extrovert is challenging even for me. And I spend my day talking to people as well, let
Yeah.
alone some others that are just head down and going for things. But no, I think in general is been pretty good.
Good. Good. I guess following on from that, resilience,
Mm,
I guess, is one of the traits considered as essential for entrepreneurs, and of course, it's something that both individuals and businesses have had to show lots of,
mm.
particularly during 2020, unfortunately. I mean, can you share some of your own experiences and techniques, perhaps, around how you've built up your own levels of resilience over the years?
Really interesting. And I was listening to a podcast called The Knowledge Project the other day,
Yep.
and I think it's episode 72, Happy Habits, talks about resiliency, talks about the ability for people to get back to their norm, right? So
Yep.
whatever your kind of normal operating state is, right? You can be on the positive, on the negative, on the pessimistic, on the proactive. So it doesn't really matter, but you know, in a time of change, how do you get back to that sort of center line, right?
Yep.
Really interesting podcast. Um, and yeah, it's an interesting it's an interesting question. I don't quite know how to answer. I think there's a lot of little things that I just tend to do. A lot of people I know in a similar situation, you know, stuff like taking time to reflect because it is a crazy mad world. You can spend 8, 12, 14 hours a day every day. If you don't get, you know, take a chance to kind of step back, you don't have any perspective,
Yep.
right? Um, and without travel, that's hard, right?
Have you, I mean, have you invested, have you thought about ways in which you can improve it over the years? So you
Oh
mentioned
yeah.
about a podcast there. Are you one of these guys that kind of invests in yourself in terms of personal reading or personal podcasts or kind of other things?
Yeah, no, I'm a hugely iterative person, right? As one of the reasons why I like being involved in a startup is I love that whole agile iteration thing, even from a personal point of view, right?
Yeah.
I like to develop, I like to change. I love biohacking, right? I love intermittent fasting. I love changing what I eat to see how that affects my brain. I love talking to other people. You know, I think all of it kind of for me rolls into, you know, I have a vision of what I would like to be or where I'd like to be or whatever it is. It doesn't really matter.
Yeah.
But how do you iterate through that process? And I think it relates to resiliency in a lot of ways, right? If it's
Yeah.
okay to fail, just fail quickly. If you know that you know there's always room for improvement. I figure as long as I'm right 51% of the time, I'm going in the right direction, right?
Absolutely. Absolutely.
I'd like to be right 80% of the time, but as long as it's 51%, I'll get there eventually, right? And I think it's perspectives like that or ways of thinking like that, that sort of mindfulness type approach to things that give you enough perspective that you can go, it's okay, it's no big deal. Let's just move on, right?
Yeah.
That's for me, those are the things. I think you need escapism as well. You know, you need chances to disconnect. For me, it's cooking and food. I love that sort of thing, right? So
Yeah.
give me a bottle of wine and a Sunday afternoon, I'm pretty happy person, right? So, or being out in the wilds, getting some fresh air, you know, anything like that, whatever it is that um, kind of makes you happy, that kind of gravitates you and stuff is really important. Especially as you get a bit older, you realize life's pretty short, right? If you don't, you know, as the quote goes, if you don't stop and look around, you might miss it. For anyone who's
Absolutely.
old enough to remember that quote, right?
Yeah.
Um, yeah, it's just a combination of all these things. I think people have to, especially if they want to kind of get into the industry or you know be a founder or something like that. You have to figure out what it is for you that gets you back to your baseline. You know, a lot of friends I know, they run every day. A half an hour of a good run
Yeah.
clears the brain,
Yeah.
disconnects them from reality, and they kind of reset, right?
Yeah.
And that's them getting back to the norm.
But just making that time for yourself to be able to do that.
Yeah, yeah, it's a lot of these jobs, a lot of industries. I mean, as you can be a doctor, you can be a lawyer, there's lots of different similarities, but or a chef in a restaurant. I'm a bit of a workaholic. I've always worked full time since I was 15, I think. I think I've had 2 weeks of not working or being employed full time. Um, and and I think I'm one of those people that's kind of built to work, right? I have no qualms about that. And yeah, I think finding ways to understand yourself, get back to the norm, find that center line, learn who you are in that process is really important. Being a chef for me is a harder job than I do. I could never be a top end chef, right? Because
Yeah.
that's a sacrifice I'm not willing to make. But you just have to enjoy what you're doing. You have to get up in the morning wanting to do what you're doing and make that part of your life. I don't believe in a work plus life, a work to live or live to work environment. I like that work plus life balance,
Yeah.
combine the two together.
Yeah. I guess finally, on a more holistic viewpoint, I mean, what do you hope emerges, I guess, from the experiences the COVID-19 pandemic within financial services and the wider business community moving forward from this?
I think I think we talked about it a little bit. I mean, there's the potential ramifications are huge, right? I mean, from how we work to where we work to everything else. I think remote working and virtual working is a really good example of something that we've always done and always expected to do for about the last 100 years, right?
Yeah.
Maybe even more, right? Since going into factories, we would only work if we went into factories. We'd only be responsible for working if someone could watch us, right?
Yeah.
Um, and I hope that across industry is a good example of actually, taking that step back and going, do you need to? You know, do we need to have a big fancy office? Does everybody need to come in, or can we offer some more flexibility? Should it be more of a hybrid approach of people coming in 1 or 2 days a week? In Scotland and Edinburgh, we've talked about in fintech, we've talked about the skill shortages for a long time.
Yeah.
We're hiring right now. We've got like 6 roles open, I think. As long as someone's realistically, as long as they're in the right time zone or even willing to work in the time zone,
Yeah.
it doesn't really matter to us,
Yeah.
right? It's easier to employ people from the UK than France or other places because then you're employing with Brexit and everything. It might even be worse. But actually, it starts to open up your perspective a bit,
Yeah.
and it means you do have to change. I think one of the biggest challenges in having a remote team just isn't the culture and the communication element, but the project management and the management, the processes, the sort of vision, the structure of how people work together is even more important because you don't have the water cooler effect of,
Yes.
oh, what is it you're working on this week? Oh yeah, let's just chat about it. You don't have any of that thing to
Yeah.
compensate bad management or bad practices, right? But it's a fantastic opportunity to kind of reset our expectations, especially in, we hear 4-day work weeks.
Yeah.
We see, I think it's a German university last week launched a program to pay people to work less, right? As a study to see, how that affects people and I think we're about to go. We've been leading into it for a number of years now, but this has the chance to be a catalyst that changes a lot. You know, Even there's a lot of preconceptions that we have out of there, and I'm the type of person, I hate preconceptions. I hate that
Yeah.
statement of
Yeah.
we do it this way because that's the way we've always done it.
Yeah.
No, I mean, startups are there to kind of, challenge those preconceptions. That's what a lot of startups do, right? They find a
Yeah.
pain and try and solve
Disrupt.
it. But just doing it because we've always done it is always frustrates me. I can't stand it. It's one of the few things that really frustrates me. Is this a chance to really start to change that thinking? Why do we need time zones, right? Why can't we just have 24-hour clock? It doesn't have to be 9 o'clock, doesn't have to be sunlight, right? It can be twilight. It could be some other time, right? And
Yeah.
I love those concepts, right? I love where you're going to go, well, if no matter where in the world you were, if I know that my 9 o'clock was your 9 o'clock, that's easier for me, right?
Yeah.
It is. If you're
Yeah.
up at 9, great. If you're not up at 9, that's fine. But now we don't have that daylight savings, which is great that it's starting to disappear, or time zone translation in the head, you're 2 hours ahead or not. If I can invite you to a meeting at 10 o'clock because I know you're going to be there and you accept, it doesn't matter. You know what I mean? So
Yeah, I do.
bit of a rant on that side, but I find those conversations fascinating.
What a fantastic place to bring the interview to a close. So look, it's been great chatting to you. Really insightful, really interesting. So thanks very much, James, for your
Oh,
time.
thanks for having me. Really appreciate it. Cheers.
Thank you.